Hello and welcome to another episode of the Silk and Steel podcast. I'm your host, Carl Zha. Today, I welcome a long-term friend of mine, my collaborator on many Twitter X Spaces, Ting. Um, Ting Xin. How should I introduce you? Why don't you introduce yourself?
Sure. Yeah. I mean, I guess on my online presence. I mean, I have a date. Well, I had a day job. I'm sort of just chilling now, which is nice. But my primary presence online is through a podcast called Escape from Plan A, and yeah, it's a wide ranging podcast. We've been talking more about sort of like AI, finance, American society, Asian American stuff, but that. But anyway, yeah, Escape from Plan A. If you want to find me online.
Yeah. Well, today, the reason I want to talk to you is because I saw a very interesting article you wrote on your Substack, which is about the correlation between gold, dollar, and oil. This is something I'm actually trying to puzzle over as well, because I follow the gold prices and oil prices and dollar prices. And I noticed there was it's a very odd what happened since the war started. The gold initially spiked together with oil, but very quickly it drops, and it continued to drop, the gold price, while the oil price is obviously rising, but the dollar is surprisingly strong. I think that the strength of dollar is probably why the gold has weakened, but I'm trying to understand why that happened. And you wrote a very timely article on that on your Substack. So maybe you can introduce that idea to my audience here.
Yeah, I mean, I think I've been following it very closely too, and not least because I'm invested in gold. I, as an American, have U.S. dollars, and I pay for gas, so I care about oil too. So I follow it, and I've been very surprised. I think, one, I have a lot of friends who are sort of like day trader type degenerate types. I don't mean that in a bad way. And a lot of them have been trying to chase the oil trade. Because if you look, there's so many reports about $150, $200 a barrel oil. Saudi Arabia, the Qataris are saying it's going to go to $250 if this thing drags on. But if you look at the price of WTI, which is in America, at least, we look at WTI more than we look at Brent, it has not broken $100 a barrel. It flirts with it, but it's almost as if there is a sort of like hard resistance at 100, and there's something pushing the price down. Every time it gets 100, it gets beaten back down. And as you know, Bessent has said that he would be willing to intervene directly in the oil futures markets, and the prospect of that was so unnerving that the head of the CME, the Chicago Mercantile Exchange, where these futures are traded, said if the U.S. government were to come in and intervene, this would be a complete and utter disaster. We would have a meltdown in the oil markets. Don't do it. So I'm just saying that to point out that the prospect of the U.S. intervening in these commodity markets is something that's taken seriously enough that the head of the futures exchange on which it occurs had come out to warn the government not to do that. And as we know, Scott Bessent this is how he cut his teeth. I mean, he is a currency speculator, and there's something he loves to do more than intervene in these systemically important commodities and currency markets.
Well, in a way, they have already intervened. They just waived the sanction on Russian and Iranian oil to try to increase the supply.
Yeah, bizarre.
And that actually, now that I think about it, it's not even increasing the world oil supply, because oil is a fungible global commodity, because it's not like the Russian and Iranians haven't been selling oil. They've just been selling to China. And Bessent recently went on a show where said, oh, this is the genius, our idea. We're basically jujitsuing Iran with their own oil. We're turning their own oil against them. So the idea that he said is there's already like 140 million barrels of Iranian oil floating around, but they're going to China, and there's nothing U.S. can do. So now, by lifting the sanction, the other countries can also buy those Iranian oil, namely Japan, Korea, Philippines, all these U.S. Allies in the region. And then he said something interesting. He said, we as Treasury, we have visibility to all the fund flow, where the money goes into. We can freeze those bank account where the oil money gets deposited. Whereas if Iran just continue to sell to China, it just gets cycled in that China Iranian trading system. There's nothing we can do. Yeah. I'm actually surprised he said that. Review the hand of his game. Like, well, okay, now Iranians know that what you're up to. Why would they do as you say? And by the way, I think now I understand why Iran is trying to price the oil in yuan. It's now Iran is telling people who want their oil tanker to transit Strait of Hormuz, they have to pay in Chinese yuan. This is because that way it's outside of the U.S. financial system that U.S. government cannot get their. Go ahead. So I got accused recently of interrupting my guest too much. So please, you're my guest.
No, I think you're right. I think it's funny because when people have these, when the war is not hot, like when it's not like a hot issue, and people take a step back and sort of assess what's going on, everyone's aware that there's a currency power play here. Everyone's aware of the petrodollar. Why do we even have the term petrodollar if it doesn't exist? Of course it exists. I mean, now that everyone's freaking out and we're in the eve of what could be World War III, who knows? I feel like the ability to think through becomes it's a little harder to think through some of these things because we're all worried about the next step. We're worried about what's going to happen. We want really sharp predictions. And one thing that we have seen is that the obvious prediction for where oil is going to go and where gold is going to go, which are two of the most important commodities in the market, and we can talk about that. I think those are the two most important world commodities, did not behave the way people thought. And the first was, despite calls for $150, $200 oil or whatever, it has not broken above like $98. It just won't go above that. So everyone who thought that they were going to make easy money riding this wave of this oil shock, a lot of them have been rug pulled out. Okay, they're not making money on their shorts, or their longs. And the other surprising thing, which most people took as unrelated, and I think it was timed that way, to be honest, but we'll talk about that later, was a crash in gold prices. Gold is supposed to be a safe haven asset, which in times of geopolitical tension like this should be on the rise. At least not crashing. I mean, I think it should consolidate its price at that sort of like above 5,000 level, but then it crashed. I mean, it lost over 10% of its value in a very short amount of time, and we had not seen a downward movement like that in a while. And the timing of it coincided with this oil supply shock. And so I was just trying to think through, why is it that what we would expect, what was the so obvious move, which is gold up, oil up, everyone's moving into these safe haven assets, why isn't that happening? And so I thought about it, and I realized gold is not just a commodity in the sense of like a silver. Silver is a metal commodity, platinum is a metal commodity, but gold is a monetary asset in the sense that I don't know about right now, but I think there was a point not very long ago where it surpassed the US dollar as the number one central bank reserve asset around the world by value. So it's on par with the US dollar in terms of its foundational importance as a monetary asset. And so it's not just like another metal. You know what I mean? And so I think we've got to consider that some things we should be pricing in gold, because for a lot of the world, gold is really the store of sovereign wealth. That's really the store of your national wealth. So to the extent that your country has run surpluses with the rest of the world, right? Meaning that you've produced more into the global economy than you've taken from it. How do you store that surplus? They store it as gold. And when there's a crisis, you can price the commodities that you need. So for example, there's an oil shock. A lot of countries, which are still highly petroleum dependent, are going to have to convert their surpluses to grab whatever oil supply they can that's currently circulating, and hopefully to put pressure for there to be new additional oil production to come online. And so one thing I thought was, well, why don't we think about oil as a commodity that's purchased with gold rather than US dollars, because that's how much of the world will be paying for it. And if you look at it that way, I think gold would be I think oil would be priced about $115 a barrel, not 98. And at 115, you're pushing towards disaster. I think I don't really understand oil pricing that well in terms of how it as an input into the economy and the pricing thresholds, but I've heard widespread 120 spells global recession for sure. So if you are a country that is paying for oil through your surplus, and your surplus is mostly gold, oil has become significantly more expensive than if you're a country that holds your surplus mostly in US dollar assets, which are rallying. So, except for the bond, that's interesting. But if you have short-term bonds, US dollar cash equivalents, then oil is significantly cheaper than if you're paying for it in gold. I think and the timing of this aligns, because the gold crash happened during this war shock. And so I think that was one way to look at it. I provided those graphs in my Substack, and I think they're pretty illustrative. I don't know if we can share screens on this thing or not, but it shows very clearly. Well, let me stop there and get your reaction. But
I was gonna say keep talking, because I'm trying to pull up your chart.
Okay.
I'm trying to do a screen share.
Okay, well, all right. So the charts that I've created, I thought, well, what's really interesting is we have a very recent precedent for this, which is the Ukraine invasion, which also led to an energy shock, right? So if you pull up I decided to just graph the price of oil denominated in US dollars versus, yeah, sorry, that's a little hard to see, but yes. Okay, yeah, it's coming up there. All right, so this chart is the price of oil in both US dollars and in terms of gold across the period of the Ukraine invasion, which was February of 22. And as you see, right in February 22, there's a massive spike in the price of oil in both denominations. It's actually spiking higher in USD rather than gold. So if you hold gold, you're not as punished by this spike, but they both spike. And if you look, as the price sort of consolidates into a more even trend, so there's this initial spike, then it drops, and then it resumes its march upwards. They end up at about the same place. So oil price goes up in about equal measure as paid in as paid in US dollars versus as paid in gold. And this is about 4 years ago. So that's the base case. And then as you see there, I think in the right, that's the most important part, is the war drags on. Oil prices continue to climb, but in lockstep. And so you would see that the price of oil, the barrels of oil measured in US dollars, would go up. But if you look at the other chart, I don't know if you can pull that up.
This is the new chart, right?
Yes. Chart. Okay, so this one. So this is the current chart. This ends at the present time. And the pattern looks really similar. If you can see in the sort of run up to the attack, I guess I could call it, there's a run up and then a sudden spike, a panic spike, and then it drops back down and then it continues its run up, right? It looks very similar to the Ukraine pattern, except as you can see, once it starts after that initial shock and the price continues to go up in terms of gold, it actually levels off for the US dollar. And so there's a huge divergence in the growth of oil's price when denominated in US dollars versus gold. It's significantly more expensive if you pay in gold. And I think most people would probably respond in the sort of, I think, obvious way, which is, well, yeah, I mean, that's what happens when gold's price crashed. And it was a coincidence that gold's price crashed. And so I started thinking about the reasons why people attribute this sudden crash in gold price, which is kind of unprecedented since gold has been going up sort of, well, I would say rather, it's been pumping for a few years, right? Why now? Well, one reason, the most often cited reason, is that there was a hot inflation print in the United States, and therefore the likelihood of any rate cuts was taken off the table. Very unlikely the U.S. is going to cut interest rates. What that means is that because the interest rates in the U.S., because the interest rate on the dollar is going up, the dollar becomes a more, one way to put it is, the opportunity cost for holding gold rather than U.S. dollars goes up because my dollars are giving me a higher interest rate. So you would expect to see gold go down a little bit, but not a crash. And also, I looked into it. It was over 99% confidence going into the last Fed meeting that there would be no interest rate cuts. No, it was a 11-1 vote, and there was a unanimous decision to keep interest rates steady, and the market completely knew about this beforehand. So there was no surprise. So there's no reason for gold to drop 10%. There was no surprise news on the rate cut side. So the inflation print, the rate, I don't think that was the cause. And the other often cited reason for the crash in gold was a liquidation cascade, which is, well, you see when and I've heard a lot of people say this on in the media, and I've had friends tell this to me as an explanation, which is on its surface plausible, which is that because gold had been such a profitable trade for so long, when other assets start to go down, when you see major drops in asset prices elsewhere, you get leverage calls because the market's leveraged. And so what that means is you have to post cash to cover your paper losses, right? The brokerage houses are not comfortable sitting on these losses. And so the brokerage houses go around, they start calling all the big funds and stuff for margin calls. And the obvious thing to do is to sell your most profitable position, and that would be gold. And so gold was being sold off in order to cover off a cascading margin call scenario. But then I thought, what are you talking about? What margin call scenario? There's been no crash in stocks. I mean, the stocks have been down a bit, but there's no crash. Even crypto has been holding up, quite well through this war. There has not been a massive decline in asset prices that would require the liquidation of gold at this level to cover off any cascading margin call. So I don't buy that either. So I've not heard, those are the top two explanations, and neither of them hold water to me. And I think that what's going on is some kind of intervention in order to basically have the dollar pegged to the price of oil. That's the petrodollar play. You want the dollar to ride with oil on the way up. And in a shock situation like we have now, where the U.S. is acting like it's going to destroy the world, and it's creating chaos all over the planet, and we want to impose our will across the planet. What better positive reinforcement to that behavior than for the dollar to rally and be the only asset that's keeping pace with oil right now? That's the only asset that's keeping pace with oil. Gold is shitting bricks. And so I think what's going on is actually Gold is not crashing. Oil is, in fact, surging. It's not gold that's crashing. It's oil that's surging. And what the weird thing that's happening is that the dollar is keeping pace with oil. The dollar is appreciating together with oil. And that's the petrodollar play. So I think that's my personal interpretation of what's going on, is that we're just doing a massive petrodollar offensive.
So you think this is because the government intervention, the Scott Bessent and his gangs, they're trying to prop up the dollar, prop up the treasury. They're trying to keep they're trying to defend the status of petrodollar essentially, and this is why the U.S. dollar has been unusually strong lately. As compared, I mean, in time of crisis, there tend to be a flight to safety to dollars, but usually there's also flight to safety to gold. But now the divergence is because of the government intervention. That's your thesis, right?
I think one way to think about it. Now, I got to be clear. I'm speculating here. I have no evidence for this other than just interpreting these graphs, but that's what people do. So let's play a game. I think what's going on is that they're trying to do a double rug pull where everyone is completely open to the idea that the US Treasury is intervening in the oil markets, which would be, they could do it in an opaque way. Actually, we wouldn't have any reporting requirement where they would need to disclose that it's the Treasury on the other side of this trade. It's anonymous trading. And we don't have any problem believing that. I think we should similarly not have any problem believing that the US government is similarly dumping gold. It's not, and it doesn't necessarily have to even be selling gold. It can use its usual price manipulation techniques, such as gold swaps. Right? So the government is willing to lend its bullion reserves out to bullion banks like HSBC or JP Morgan, and those banks can sell the government's gold, right, and buy it back later at a depressed price. They can flood the zone with gold. The U.S. is actually, I think, could via gold swaps enter into. We should talk about the word swaps. They're not actually swaps. They're actually repurchase agreements, but they're called swaps for legal reasons. But they're essentially lending their gold bullion reserves out to banks to go sell into the market. And these banks are market makers. So when we talk about the price of gold, it's the price set by bullion banks. It's their bid ask. It's like what the bullion banks are paying and receiving, asking for physical gold. And the banks are able to move the price downward if they're able to get hold of a lot of gold to sell into the market, if they're long a lot of supply. And the government is authorized actually to enter into currency stabilization tools, including swaps, and against monetary assets that would include gold. So the government can enter and does often enter into gold swaps with bullion banks, which provides bullion banks with a lot of gold inventory that they can sell into the market, and the government will later buy it back. So they have a lot of techniques to control the price of gold. So how would that, for example, control the price of gold? The government can set a price for gold in these swaps, and that acts as a foundational anchor for what the bullion banks are going to set the price of gold at, because the bullion banks eventually need to buy that gold back and send it back to the government when the swap expires. And so the government, by naming a price on the swap, is exerting a huge amount of influence in the gold market. And if we believe, I'm not saying that it's true because I don't have any evidence of this, but if we believe that the U.S. government is in fact trying to manipulate the price of gold, just as it's trying to manipulate the price of oil, I think it makes a lot of sense. In a geopolitical sense, it absolutely makes sense that punishing gold reserves, countries that reserve in gold, punishing them right now is good policy. Because what that's saying is, if you're disloyal to the US dollar, if you're disloyal to the US dollar system, and you're trying to join these BRICS countries that are trying to de-dollarize, become use gold as a central reserve asset rather than US dollars, but now we're going to reserve in gold as the world traditionally has. We're going to punish you. We're going to punish you right now because your price of oil just got a lot more expensive because you chose not to hold dollars. Is that what's going on? I don't know, but I think the incentive structure, together with the instrumentalities available to the government, together with scheming eunuch Scott Bessent, adds up to, I would think that this might explain a lot of what's going on. That's my personal pet theory.
By Occam Razor, I think your explanation fits. I mean, makes most sense to me. Okay, I'm asking you to predict the future now, which is always fraught with danger. But do you think this trend can persist over a long period of time? No. I mean, is this divergence of dollar and gold, is that's sustainable?
I think it's gonna be Bessent versus the Hong Kong dollar redux when he got his ass kicked by but when he got his ass kicked because the PBOC decided to it never actually intervened, but it said we will if need be, right? I think what's going on, what's interesting, I think the price of gold would be a lot lower actually if the US was able to basically run away with the market. If we had full control of the gold market, gold would be at 3,500 right now, or something like that. It would be below 4,000 for sure. We try to crater gold, but it's not. I think if you look at this from the perspective of a Scott Bessent, the spoiler in this is again the PBOC. I think that probably the Chinese are buying up the gold that the U.S. is dumping, and they're going to have to buy it in U.S. dollars. And to raise, where are they getting these U.S. dollars? I think they're dumping treasuries, because if you look at treasury yields, they spiked through this. That's another weird piece of this puzzle. Why is the U.S. dollar strong, but the interest rate on the longer dated treasuries is going up? If everyone's cramming into U.S. assets, flight to safety, why are bonds being sold off like crazy? Now, everyone says that, it's because everyone is no longer satisfied with the credit worthiness of the U.S. government and whatever, inflation or whatever. Okay, maybe. Surely that's part of it. But I think if you look at the chart, I don't have a chart for this one, but you can look it up. There is a nearly vertical spike in the yield, and it's really shocking and very upsetting to the U.S. Treasury for sure. That it's one thing to have your currency go up, but to have your debt fall that's not great, because that's not helping us finance our war. We need the bond to get strong. The bond is weakening, and I think if we believe this cycle of the U.S. dumping gold to punish gold reserves, while China is as the sort of central economic and monetary pillar of BRICS is propping up the price of gold to help all countries that reserve in gold, then I think the fact that treasuries are being sold off kind of comports with this dynamic, because the Chinese PBOC, Chinese Central Bank, would need to sell off its bonds in order to finance purchases of gold. So while the U.S. is dumping gold, China is dumping treasuries. So they're both dumping. And now we're in a fight between, I think in a way, if indeed it is China that's dumping treasuries, China in a way is putting the pain on any country that has reserved in U.S. treasuries. So if viewed from this angle, this is a financial war where the U.S. is trying to punish gold reservists, and China is retaliating by punishing U.S. Treasury reservists. The only difference right now is I think the advantage might at the moment be with the U.S. simply because of systemic, the institutional inertia of the petrodollar system, where everyone is ingrained to think that to buy oil, I've got to liquidate for US dollars now. And I think that explains, at the same time, now we've explained, I'm really trying to sell this, Carl. We've explained falling gold. We've explained stable oil, i.e. surging dollar. We've explained falling treasury rates. And the other thing that this helps explain is why Iran suddenly has a fetish for RMB, for the petro yuan. Why is Iran insisting that oil be paid in RMB? Because they understand now that China is a big part of this war, but on the financial side. And the financial side, I got to say, that's the very critical part of this war, because if anything makes Trump and Americans nervous about this war, it's the prospect of the bond market rejecting the idea of this war. And so far, it has violently rejected this war. The only thing keeping it viable is the oil price is relatively stable in the market for now. Right? So it's a very interesting time. I don't know where things are going to go, but I would think that oil is eventually going to break out anyway. And ultimately, the legalities around the U.S. government's ability to dump gold is quite limited. It doesn't have a huge amount of space to be doing that. If it was doing so, it'd probably have to break a significant number of laws to do it. So I'm not an expert in that field, but my guess is the Treasury's financial armada for this little expedition of theirs is more limited, and the Chinese commitment to a post-dollar system is such that I don't think they're having much buyer's remorse when it comes to the amount of gold that they've been hoovering up. I don't think they're intimidated by Scott Bessent's little trade here. Purely speculative, Carl. This is all speculation.
You know what? That makes most sense to me. Your explanation, I always try to go for the simplest explanation. Your explanation fits all the bills. Now I want to switch the topic around a little bit. Because you right now live in the United States. You are American. You live in U.S. all your life. Has the war so far impacting any aspect of American life? I mean, do people on the street in New York, do they feel the impact of the war right now?
In a way, I don't know if there's any. I mean, the war's far away, and by design, we create wars far away so that it doesn't affect our homeland. And so, no, I mean, virtually American wars these days are always focused in the Middle East, and they don't really affect the day-to-day here. But I would say at a psychological culture, the feeling, right? Like the feeling. Gas prices are up, but that's not really, disruptive. At least not yet. I would say that at a political level, and we were talking about this before we started, even though there haven't been a lot of protests, like the Iraq War, there was a huge amount of protest leading up to the war. And so far, I've not seen any mass demonstrations against this war, which would lead one to maybe believe that the American population is largely supportive or disinterested in the war. But I don't think that's true. I think this war is perceived largely, I don't know the extent, but I would say this is a pretty prevalent view, that this war is seen to be the act of a president under duress by Israel. This is a very fringe view just a few years ago, or maybe just a few months ago, but it's become widespread. And I think a lot of people are, and by some reports, even servicemen in the military are very reluctant to jump in on this war on the basis that this is really Israel's war. And I've seen mainstream politicians come out and say that if what Rubio said is true, and we all know what he said, which is that the prime mover here is Israel, not the United States, that this is a very questionable reason to start a war. We have reports now that people very close to Trump, including even Vance, are actually quite against this war. And we even had Joseph Kent, resigned and has been making the media rounds saying this was Israel's war. I think this perception has actually seeped in quite deep because, one, of Epstein. I think the idea of Trump being under duress because of some blackmail issue. I don't know if I believe that personally, but it doesn't matter. What matters is perception, and that's a wide, from my experience in America, that is a very widely held perception in the sense that people joke about it. People say, we got this war because of the Epstein files. Operation Epstein Fury, you know? So, yeah, I mean, even despite the lack of mass mobilization against the war, I would say that your average American sees this as the result of Israeli infiltration. I don't know if there's any other way to say it. So I think that was my answer to your question about what it's like in America. I would say people are very skeptical of this war. MAGA is turning on Trump. They view this as a very deep betrayal of the core animating ideas of MAGA. And, you know, that's a big deal. To lose the right wing in America is a much bigger deal than losing the left, because there is no left. I mean, no one cares about the left. But to lose the right wing, you're in trouble.
I mean, that's the most surprising thing about this war. So far, the strongest anti-war voices come from the right. You know, come from the likes of Tucker Carlson, Marjorie Greens, while Democrats are mostly set on the sideline. But, you know, because we know they're all live on the APAC money. I mean, it doesn't matter for party affiliation. All the U.S. congressmen are paid and bought for. So I think that's why we haven't seen a united political opposition from the establishment.
I mean, the
which
Democrats
is really a shame.
They're all chicken hawks or whatever that term is. They pretend to be anti-war, but they're totally fine, you know. So put up some nominal resistance and appear, you know, reasonable and peace loving, but ultimately do nothing about it.
They're probably also thinking, like, you know, they will have the November election in the bag. You know, just let Trump do his thing. They don't need to stick their neck out to take one position or another. Just let things run its course. But we have United States, the most powerful global empire the world has ever seen. Basically, it's drifting toward war, or not drifting, plunge headlong into war, and there's very little questioning, either from mainstream media or from its politicians. I mean, it's amazing. Like, everyone can see now, we are headed toward catastrophe with a closure of Strait Hormuz. It's gonna totally destroy the world economy. Yet everyone is just letting the president do his thing. You know, like every day the press releases coming out of White House sounds like Bob.
Let's be clear about the United States, right? How we're structured. When it comes to domestic affairs, we are a democracy, right? We've got checks and balances. The president's authority is extremely circumspect when it comes to domestic issues. But when it comes to foreign policy, when it comes to anything beyond our borders, the president is a complete dictator. the president, there's no checks and balances on foreign policy and war. So any check on war is actually very nominal. We don't really respect the idea that Congress needs to authorize war or anything like that. The president just goes in and does war. So when it comes to our foreign policy and war, the U.S. is not even nominally structured as a democracy. So that's one.
I mean,
one reason.
The Congress do have the power to impeach the president, but I don't think they're gonna use that to stop this war, because all the congressmen, most of them are in support of this war because they're all being paid by Israel through the APEC money. So this is sad. I mean,
sad.
I don't think you're right. It's no longer a fringe theory that U.S. is fighting war for Israel. I mean, I think it's pretty again, Occam's razor. It's the most simplest explanation. This is not end well. So for people, is there anything else you like? Go ahead.
Well, I just want to, I mean, as a summary, I mean, yes, there is an aspect to this war which is obviously driven by Israel's bizarre and religious insanity. Okay. But for the US, I would say that, like, we do need to understand, like, the US does have reason to do this as well. And for the US, it's because ultimately we must enforce dollar dominance. Our economy is not structured to be survivable if we don't have control of the global currency. I mean, everything about the United States is structured around never-ending government debts and trade deficits, and our entire economy is driven by financial assets. It's driven by the circulation of dollars around the world. And it's been this way for decades. It's the only way of life we know. Go back to that network speech, But
Xing, of all the latest war, all he did is to exert further pressure on the dollar system. Start from the Ukraine war when they kicked out Russia from the SWIFT system, to now when Iran demanding everyone purchase oil, pricing yuan. I mean, all these wars just make matter much worse. It's not, the lashing out is not helping. But yeah, it is what it is. I mean, we are at the. I mean, like, so much have been said that United States today resembles late Soviet Union.
Yeah, we've been saying that, right? Yeah. But look, I'm not selling my gold.
Go ahead.
I'm not selling my gold. I don't think that we can keep this up. I think ultimately gold has to govern international trade. We cannot rely on US dollars. There's just too much eunuch energy and scheming going on in the U.S. financial system. It's no longer a viable system for fair and balanced trade around the world. And no one needs U.S. dollars anymore because all our shit comes from China. So what the fuck do you need U.S. dollars for? There's only one reason, and it's the Strait of fucking Hormuz, okay? There's only one currency that's allowed to go past there, and it's the U.S. dollar. And that's why Iran is like, no, motherfuckers. There's only one currency that goes to get through here now. It's the Chinese currency. We're flipping the script. This is why this weekend is so crucial. Do we go in? Do we send in troops to open that shit up and maintain the U.S. dollar dominance over the oil secreting organ of the global economy, or do we lose fucking control? And I think, frankly, if you look at the state of the United States right now, our ability to plan, our ability to project military power, our ability to not get into a war that we didn't even decide to start, there's no fucking way. It's crazy. So anyway, all right.
I mean, there's nothing to do but to laugh at this point. It's just we live in tragic comedy. You can you see the crash a mile off, and everybody knows it, and whatever they do, but the people at the top, whatever they do, they just make the matters worse.
Terrible.
And yeah.
Anyway,
it's
I thought that was really thanks for having me on, man, because I mean, I think it is worth it. It helps to get an idea, at least in your head. I'm not saying I'm right. I'm just saying no one knows exactly what's going on. So just take whatever model you think works best. Just can I make predictions with this? Can I have a better grasp of like what the dynamics are, what the incentives are, and see if it plays out? And I think that's what's going on. Again, to summarize, I think the U.S. is manipulating the gold market in order to prop up the U.S. dollar, punish gold reservists, and I think China is fighting back. I think they're punishing U.S. Treasury reservists. Everyone loses, but ultimately there's going to be a victor in this, and I think that the U.S. has bitten off more than it can chew. And Scott Bessent is going to be 0 for 2 against the PBOC. Okay.
For people who don't know, Scott Bessent was the right-hand man of George Soros back during the Asian financial crisis in 1997, 1998. And he followed on the success of the raid on Bank of England. He thought he can make some quick money by attacking the Bank of Hong Kong, by shorting the Hong Kong dollar. But what he didn't count on is the fact that Hong Kong just had a new landlord, and China wasn't going to have it. And People's Bank of China put its foot down and told the Hong Kong government basically defend Hong Kong dollar at all costs. And Scott Bessent lost a lot of money in that bet, and I think he never got over it.
He never got over it. I wrote that thing. I wrote that thing, and the CGTN or whatever reached out to me because they were like, "Wait, what's this story?" And I was like, "I'm telling you, this guy has a fucking hard on for China. He wants to. It's like the white whale." I was telling them it's like the white whale, and he's like Ahab, and he's not. He's just obsessed. And I think that's another aspect to this story that I think lines up is Scott Bessent wants to play scheming eunuch currency manipulation games against China, and he's got one now. So the trade war was nothing. I mean, this is the big one.
Yeah, again, that's the Scott Bessent as the gay eunuch of the palace is the most a model we have right now. I mean, it matches all the Chinese history we know. A stupid emperor and his scheming gay eunuch. Yeah. on that happy note, well, if people want to follow you, Ting, where would they go?
That's my handle on Twitter, Monjong, and you can search for the podcast Escape from Plan A. And if you want to read the Substack post that I make, I've been making some posts about stocks and commodities and financial things because I spent my career in finance. You can go to my Substack, which is called Interarma, INTER, Inter, and then Arma, ARMA.substack.com.
Thank you again, Ting, for making your time to speak to us. For everyone else, thank you for tuning in. Until next time. Bye-bye.
All right. See you, Carl.